where I was, where I kind of, the market sort of melted up there in July, and I didn't, I let it get away from me. So no, that won't happen again. I hope.
Well, I won't say it won't happen again, because it will happen. It's just understanding your risk to reward. I mean, there's going to be things that are going to go against you. You just have to be prepared for it in the sense of understanding what your max risk is.
Hey, I got it can I interrupt you real quick? What is this? I'm looking at this. Is this the webinar that you had recorded for tonight?
A link.
Are you doing stuff right now on?
No. Well, I mean, I just brought up the SPY chart right now. This is my platform.
Okay. All right. Very good.
So what you're saying? I just typed in SPY because you're talking about when the market melted up in. You're talking about when the market melted up in July.
Yeah.
I'm kind of back and looking at it. So, this move right here, I mean, I wouldn't consider this a melt up. I mean, it's an aggressive move, but it also came off an aggressive move of consolidation here. When I take a look at, and we can go back and look at implied volatility, the problem is that the implied volatility levels were relatively lower. It's a summertime as well, and you're coming into a market that was just coming off a pretty aggressive move in a consolidation. So I don't know how many months you went out on the iron condor, but the problem with that is that you have to have a higher volatility marketplace to be able to put it on at times, or even in this instance where volatility was kind of in the middle, volatility started picking up, and that when that happens and the market does move up, it's just the position was probably a little bit too tight. And when I look, I don't know how many months you have to look out, but when I look at iron condors and trying to put that position on, I'm looking at resistance here, and this is where the part of the upper end of the iron condor would have been. I don't normally put them on months out or months or weeks out, because I just don't like having to tie up that amount of cash and or having to watch it. So, one of the things I would have done.
This was on the Russell.
On the Russell, okay.
On the Russell, and it just moved up aggressively, from the high 600s, if I remember correctly. I don't have it up, but up to I think my upper was 735, 745. I had to adjust it up, but anyways, it's fine. I realize when things move quickly, it's difficult. Those are more difficult. Like you try to roll them to the next month, and the spreads are gigantic. And I mean, I ended up calling TLS, and they're like, well, these guys won't. They're not going to. In this market, they're not going to. You're not going to get a good fill, and it's going to be very good. So it's fine. I mean, I learned a little bit from that, but.
All right. So
I just kind of want to get. I just need to get a perspective on how really to kind of get restarted, so to speak. I mean, I sort of dipped in just a little bit last week on Friday.
Yeah.
I just sold some puts on FCX, and then took an alternate position on bought some January 15 calls on DXD, just trying to offset, see what might happen today. Nothing major, and I mean, I'm like today, I'm. One is up 300, the other's down 350. So kind of an offsetting position. No big deal, just to kind of, get back in there and see. I mean, because I don't, I think, I don't know. I'm wondering if this is kind of moved down, because Treasury.
Why did you sell puts on? Why did you sell puts on FCX? Why did you sell puts on FCX?
Because it was January 33s, and I mean, I was looking at that, and it hasn't really been that low. Let me move this thing here so I can see the chart a little better. Hang on 1 second. Basically, kind of as an offset. If it went down that low, I mean, I'm sure I could adjust. Or I was kind of looking for a little bit of a pop on that, and it's just I was kind of just doing some reading, expecting the market to maybe go down a little bit after the Europe thing wasn't completely fixed. And I mean, I've got plenty of time on FCX, and maybe take quick profit on DXD like today, and then kind of hold on. It was just a.
I got you.
I mean, but I don't know.
But when you're so you're explaining to me, I mean, like you have risk to 33. So I mean, this is a level. I mean, I would say that is support. This is a support level right here. And this is what I see automatically. I have this line drawn from my other analysis of just looking at this chart. But this higher swing low is when you say 33 is what I'm looking at to see where support. And if it does break below here, 33 is, you can see where my cursor is at. It's right at 33 is below. It's 33.78 here, so it would break the support level a little bit. But if that were the case, and you wanted to sell a put, well, I would tell you, and to me, my thinking is when you're telling me this is that I would wait for it. If I wanted to sell a put, I would wait for it to come into that level. And the reason that would be is because I would actually look not to sell it possibly at 33, but maybe a 30 on a pullback. You have it coming into resistance here, and you're pulling back, and just you're selling the put here, and you're saying, well, if it does come down, I have some time on it or so forth. But that's where you're taking the pain on, and that's not what ideally that's not what we're looking for. You want to look for when it's going to move or there's a position to be able to take advantage of. Now, when I look at this, I see a bit of a flag forming here. Just on this little bit of consolidation, so I'll delete some of these levels for you so you can see. I'll just delete.
No, I can see it. It's fine. I can see it just fine.
Okay. So I mean, right here, I see some consolidation. For a move higher, which selling a put, and it's coming into this level of support here, and it could break out to the upside. Well, FCX and gold. I mean FCX. So you have to look at copper and gold. So we look at JJC, which is just the copper ETF. This is something I track in the video every night. You're kind of getting a move back into here. It's been in a range a little bit. And, GLD, you're looking at, and GLD is getting hit pretty hard today. It's coming all the way back. Right. It's broken this level that it broke out again, and now it's back in this range that it was back in late September and early October, which looks like it wants to gravitate to the 200-day moving average, which it hasn't tested for some time now. So to keep in, you have to keep those, look at those on the SSCO. I mean, so the name that I like out of here is SS.
Yeah, SCCO. Yeah,
SCCO. Southern Copper. But I wouldn't be interested in selling a put, per se. I would be interested in selling, or buying a call or call spread, especially on this one. On the FCX. If you're to me, you got to be willing to own this at 33. If you're looking to sell that, but you're so far away here, you're so far away that you're not really getting that bang for the buck that you really want. It's kind of like
you mean by selling a put?
Yeah. So if I look at it right now, you're decently out of the money, but you have 40 days expiration. You sell. We talked about the 33. So the 33. You mean? Are you talking? It
was February.
Oh, okay. Oh, wow. See, yes, you have time. You have 67 days. So you get $1. Here you're getting $1.50 for it. But all the margin that you have to tie up for this is just it's not ideal. You either want to sell, buy something lower, or get into some kind of position that lets you take advantage of a potential move higher. So, one of the things I've been working on are broken wing butterflies. So something to look at here is, what could it gravitate to in a time frame? So 45 would be an ideal position. Let's just take a look at the Januaries. Let's just take a look at where 45 would be. So let's just give it 45. Let's do an unbalanced butterfly. You want to give yourself enough movement between it. So 43. So you got 2 points on each side, and here it's a 3-cent credit. So it's a small little credit, but you have upside. If you take a look at here, analyze it, time to get it for a debit. But if you get a move into 45, like the level is a pretty a pretty major level of resistance. This is also going to be a major level of resistance as well. So ideally, this is something I wouldn't want to take, because I want to at least get some kind of credit, which looks like it's trading for a credit right now. So you get 4 cents, but you have on a position that's 10 by 30 by 20, so you're short 30. So the side that makes the most money is this 1 by 3. It's a 1 by 3 ratio, and you're buying the 2 out of the monies to protect the ratio, because you don't want to. You could do a 1 by 3 ratio, but to reduce the margin, and also in case of it getting bought out or some kind of news that sends it a lot higher in a very fast time frame, you want to cover that. So here, the most that you lose is 2,000, or the most you gain is 2,000. The most you lose is 2,000 as well. So I would restructure this a little bit so I could get more risk, or I have less risk and more reward. So maybe, I have it set up where I'm making 2,000 and my max loss is maybe 1. So you can play around with these. You can, potentially, you can see when you're playing with the Analyze tab of how I'm adding on to it and how this position's looking here. Now I risk, on a position like this, I'm risking 1,000. I have profit potential of 3,000. But now my trade is a 46-cent debit. So something I would say you want to play around with and analyze. But the broken wing butterflies are a really good start of being able to do something like you're talking about, is where you're not always in front of the computer screen, and possibly for a small debit or even a credit at times, you could take a position and take a bias to a move higher or lower on what you're looking for.
Yeah, because really that's kind of my. I don't mind if I know I'm going to be around. Taking a more bullish or bearish stance, a more directional type of thing. But I want to find. That's why I actually have taken now I've just paper money traded, but something you said to me the first time we talked was okay, because I was telling you how I had some success with these short strangles. You're like, well, why don't you protect yourself even if you just buy a far out of the money call and put on each side to to kind of protect against disasters, so to speak. And those have actually worked out just on paper. So of course it doesn't count, but have actually worked out okay though on some of this stuff where you can let it kind of incubate for 3 or 5 days or 4 days or whatever. If you get a move a better move sooner, fine. But I'm just looking to kind of scalp some positions. I don't need to wait for that whole thing to expire or whatever. But
yeah, so if that's the case, then the FCX position, that's a position that you're going to have to watch, and you're sitting on for 46 days.
Well, I'll tell you right now. Let's say that we get a move up after Christmas rally or something at the end of this week, and I could make I'm fine closing that thing out with 35% of what. 35 or 40% of what what I think I sold it for $1.20.
Okay.
If I was able to get $500 on that, in the space of 3 or 4 days, I'm, or a week, I'd probably be okay with that. I don't like to hold those things just because there is a risk, especially with individual companies as opposed to indexes. So I'm not, I know the theory about. If you want to own a stock, sure, sell some puts in, and if at the price you want to own it at, so on and so forth. But that's not, unfortunately, the account that I have is not really set up for that because it doesn't have enough money to, sure. So, is that do you think that's a bad way to look at things with this selling some puts just to, instead of buying calls and watching premium waste away, if the move doesn't go your way right away, is that, or is that too risky, do you think, to sell puts on things? And you could even set stops on the upper limit, if you say, okay, I'm just curious, is that something you probably wouldn't pursue?
The reason I'm not too, so FCX, you're not too much problem with. But when you get into a name like Apple or Amazon, I mean, the margin requirements are just going to be so extreme.
Oh, no, I would never. No, I can only afford to sell like bull put spreads or something, or bear call spreads. Yeah, I have to back it up with a. Yeah, I can't afford. I don't have the margin to do that.
I mean, it really boils down to the type of trader that you are. For me, I'm not really interested in selling a put. I would be interested in selling a put when it came into a support level, or I'm looking for a bounce. Okay. And the reason that it would be is because I'm looking at a level that I can identify. If we came, I'm using my cursor here, if we came down into this low here, I would be interested in selling a put there, maybe at the money, possibly being a little bit aggressive, and selling a 33 or potentially even a 32 or a 31.
And looking for the bounce. Came down to around 34, 33, the actual stock price came down, you'd sell an at the money put down there?
I would consider looking at doing that as a strategy.
Okay.
I don't like to, I mean, it's just my type of trading. I don't like to hold those kind of naked puts overnight. I've taken big hits in my own trading account a few times, and it's just something I'm not interested in.
Then that's what I need. I mean, he's right. Let's be honest. If something happened this morning or tomorrow and this market just went down, 1,500 points or something or other, sure, I'd have, I could come up with the money to take ownership or whatever. But I mean, I know that don't ever sell puts on something you don't want to own. And the truth of the matter is, I've used the selling puts as kind of as a substitute for buying calls, just because I'm not. I've gotten burned so many times in the past with the premium, buying the premium, that I'm kind of just. That's what I really like about your trading. There's a lot of it is I'd much rather take a credit or sell a put spread or something, strangle or whatever, something like that, where you're taking in a credit and letting the premium work off as opposed to going the other way. But I guess you have to have a longer time frame for that also.
The way that you're looking at it is a longer time frame. I mean, for a setup here, I mean, if you can explain to me a setup that would make sense on selling a put, I'm more for it. Like on a Friday, I sell a put spread on the opposite direction of a stock is moving, or I'm looking at a resistance level. If you can explain to me and articulate the reasoning behind it, and you're getting to a level that you can identify. Here for me, when I look at risk, I have risk from where you sold that put all the way down. I mean, potentially you have a support level here, but I'm really looking at if the market does pull back and it does. We'll look at the swings that it had. 33. I would be looking to sell it at levels of resistance. I'm sorry. I would be looking to sell those puts at levels of possible support. So, for just what we're talking about right now, 33 is what I'm just focusing on for just this time being.
That's fine. That's all I need to know. I mean,
I would want it closer to this level, and the reason why I want it closer is because then I can identify, where that bounce could potentially play, and I still wouldn't use a potential outright selling a put, just because of the margin requirements, and B, just because of the risk. Now, overnight risk I worry about, and just in my own trading, I'm worried about that overnight risk. So I usually hedge it, with some kind of out of the money call and create a bull put spread, an opposite on a bear put spread. And here you have to always consider this, especially when you're selling puts, is that the market will melt down faster than it will melt up. Markets don't typically melt up. They will move up slowly, but markets will quickly move down very fast, and that's what really hurts put sellers and iron condor and individuals that sell premium because they're looking on the put side of stuff. That's what really wipes their account out or really hurts them. They go a long time or they go a few months having success. They get a little tight. They get a little tighter. Volatility picks up, and then bam, it really hits them, and that's what really wipes them out sometimes.
Okay,
you always have
that's
to
fine.
and that's one thing you should always instill in your mind is that the market will. And I'll look at Netflix. The market will sell off much quickly. I mean, this is Netflix here, and just notice of how the move will have here in a few months.
Netflix.
But look, if we look on a weekly, we're at right here. It's a few months, but back how long it took to get to that level. We're talking since 2010 to mid 2011. So 14, 15 months, and all that price move was erased in a matter of weeks. So
yeah.
Markets
Right. I guess
markets as a whole, and you have to understand too, on individual names, there's the individual name risk. As when you look at where you talk about the Russell, well, the Russell's a wider index, and to get those big moves, it's not really happening in risk. You have market risk as a whole, but you can really identify, and if you look back at some of the levels, when the market really tanked, and this is probably the one that you always want to keep in consideration, this move right here, that's what you want to keep in consideration when you sell an iron condor of what a possible potential move could be, if the market did really get aggressively sold off, like we saw here. And this is a weekly chart, but you want to look at really extreme matters of time in an index, compare that to what you could potentially set up. And that's when I look at structuring trades, that's what I keep in consideration, just what happened before and taking that whole blueprint and applying it to my trades forward.
Okay. So then I guess with how I should look at this, obviously, because it is, the market's pretty nutty. I mean, the volatility, there's a lot of, it's much more volatile, obviously, than it's ever been. And I guess that's where it's doing stuff like that. I mean, I need to always have some sort of protection in the back of my mind. And so for the type of trading that I want to do, which, is and that's something I kind of wanted to start off with today, is just, where, in your opinion, how should I structure this going forward? Because as you can tell, I've kind of been bouncing all over the map with different strategies, different ideas. I've got 3 or 4 different lists, on TOS of stocks that I like and indexes that I follow, but it's all way too, it's all too much. Everything just varies so much from day to day, being able to watch all this stuff. Should I be getting, a stable of like 3 or 4 indexes that I just can, that I can trade on consistently, or, all I'm looking for is to scalp. Like I said, I know you hesitate to put a dollar figure per month, so that's fine. I would like to just and
if you want, if that motivates you, then that's fine. For me, the dollar amount's not really. We all have different triggers, and if a dollar amount is something that is set in your mind or something that you think will help you, then that's fine. For me, it just doesn't work that way, and I feel like there's a lot of pressure of trying to get to that dollar amount, and that's the only reason why I said that.
Feel that. Yeah, you're right, and you're absolutely right, and that's me. I need to look at it at a different way, but it sounds like, at least for a baseline, I ought to be, a lot of these trades that any of these trades that I do, I should obviously keep in the back of my mind, what's going on, which I do, but, it seems to me the odds of, for example, of, FCS, what is that, the largest miner in the world, and all this, completely melting down in the next month is...
There's accounting risks.
Yeah, you're right, and there's all kinds of other stuff, so...
You never know. It's a company, and you never know. And you could be right. I'm just giving you the,
No, because you're right. If it did melt down, I could be, I'm not going to say I wouldn't be wiped out, but I would put a severely large dent in my, as I think I told you, I've got, 26 to 30,000. This is my so-called trading account for now. I don't want to mess around. Other stuff is retirement money. You can't do a lot of this. This is just for me to get started, so to speak, and become a better trader, and then add to it, But if it all fell over tomorrow and I lost all the money, I'm not going to be on the street or anything like that, but I'd be severely upset.
Well, yeah. But that's the whole thing, and that's how you have to treat it. At the end of the day, it's really what you're doing is you're using an asset, you're using leverage, and that's how professional traders, and I really don't like to use the word professional traders that trade a large amount of money. What they're doing is they're leveraging their money. They're taking an asset. There's no emotional risk to it. They're just using it as a tool to make more of what they're trying to get, so more money. And
well, there was up until recently, but I realized after joining your, it's either like get in the game or go home. Is basically what I told myself, because I was really in the game for a year, and then I kind of got, I'm going to take a step back and learn more strategies, in August, September, which is what I did, and then kind of melted, kind of went into October, and I'm doing a lot of paper trading and trying all this different stuff, joined your service. I follow one other service that I find real good for, that's Full Stock World. I think I told you that I find real good macro trends, and I mean, they have good trade ideas and stuff in there too, but I can't possibly take all of their stuff.
That's
so
the
I
other
would
thing.
rather.
You have to isolate. When speaking with you, I mean, one of the things I know I kind of get, and I could be wrong, is that you just, right now you're just kind of all over the place. I mean, like.
I am. You're absolutely right. That's why we're doing this. You're absolutely. I've got to drill down my focus.
So what I would tell you is just, you got to just relax. I mean, it sounds like you have like 1,000 things going through your mind. What we just got to do is you just got to start from the basics here. In the first basic, I would tell you, especially that's going to help you improve your trading, and I don't know if you do it now, is you have to keep a journal. I mean, if you want to take this seriously. Okay.
I've got a journal, yep, with why I make the trade and when and the whole, what my thoughts were and how did it end up. And I was doing that with paper as well as my stuff.
Okay, good.
I started it last summer, but yes, I've got a journal.
Alrighty. What after our phone call, if you can you send those? Do you write them down or do you keep them on a computer?
No, I write them down.
Alrighty. If you don't mind,
if you could just just jot down some notes,
Okay. Well, if you don't mind, see, it's good that you're doing it. The purpose of the journal, and just in business and it's a business and a personal aspect as well. I mean, I have a personal journal, have a workout journal. It's just to help you understand of where you were a couple weeks ago and where you are now, or what could be going on. So the things that you want to keep in consideration are, why you got into the trade, what you're looking at, how you felt. For me, for my trading, emotional aspects of the trading are kind of the big thing for me. How was I feeling when I took that trade? Was I very confident? I rate myself from like a 1 to 10. Was I pretty confident on it? Was I not so confident? And if I wasn't feeling that good that day or something was going on, I write that down too, to just kind of get a thinking behind, the reason I might have been looking at this trade, or what made me take the trade, and the emotional aspect, my emotional capital as well. I also have trigger points where I'm looking to take profits or take a loss, and just what I see in a lot of my trading's technical. So I'm writing down a lot of technical stuff of like, I'm looking at a bull flag here, and if it breaks out, I'm going to be looking to sell into strength. If it doesn't, I'm looking to get out here at XYZ, and that's how I really position my trading journal.
How should I just in general, those are everything else is in cash in that account. So I started, like I said, I kind of tiptoed in. Is there...
And you don't need to use all your cash. I mean, that's the thing with option trading. I mean, my trading account, I barely touch, I would say 50%, using all of my account at one time. I mean, maybe at one time I'm using 50% of it, or maybe a little bit more, but I always have cash. That's always on the side.
That's I think the best. With this account, I would probably want to go no more than 50% of use.
And listen, you don't need to invest all your. I mean, that's the whole thing with trading and with options, is that you're using. You'll have the thinking or the belief or other people saying that, well, if that cash is sitting on the side, it's not doing anything for you, that's completely wrong. You're having a risk-managed approach where you're using money, and how I visualize it is that I use this money, I take profits or I take a loss, and then I take that money and I move it to the back of the line, and then I keep rotating the money along, and that's my visual thinking behind it of how my money flows. Is that I'm taking, I'm using money for this trade and this trade and this trade, and then I close them down, and then they rotate to the back of the line, and then the fresh cash from the line continues to move forward, and that's how kind of the cash, my thinking and my thought process of how my cash flows in my trading account.
Yeah, I just with this account, I don't have a problem being in and out of stuff, and a couple days swing, whatever you want to call it, where sure, maybe a condor of some sort, or maybe some sort of a something variation of that, short strangle condor or whatever, for a week or two, just to realize. But I mean, in no if it's a credit of $1.50 or $2 or whatever it might be, I mean, for me, I've kind of learned, because I kind of learned the hard way about trying to milk everything out of that. I would be much happier, and I can set a level. Okay, if I can get 35% or 40% of the credit, I'm okay with that, and then go back to cash and then reevaluate. Because that's just, that to me will be more successful than trying to milk one or two trades for, a month and then exposing myself to problems that may or may not come up with the market. So you think in terms of, should I just be looking at, instead, because I am all over the map, you're right. I mean, like I said, I've got more watch lists. Well, not more. I've kind of distilled them down, but I still have, a bunch of watch lists of different categories and stuff like that, and couldn't possibly trade in a quarter of them, let alone all of them. So in terms of, should I just be focusing on some indexes, or just, obviously I'm going to follow your stuff and kind of.
Are you still part of are you still part of the Phil stock world?
Yeah, I am.
Okay,
yeah,
I would in my honest advice, and it has nothing to do with their service. I don't know what they offer, but on a personal level, and just because you're working with me, what I would tell you is to get rid of it. And the reason why I would tell you to get rid of it is because you have to get rid of those things. You have a feeling of, I'm going to miss a trade, and that's why you have so many watch lists or so many things going on, and you're searching. And this is how I was when I first started trading as well. And even I'm working on a different site, a different business, and I'm doing different things as well, where I'm thinking I'm going to miss this and I'm going to miss this. So I'm buying these courses and things of this sort. But what I would tell you is that you really just have to focus on one thing, and I would get rid of the Phil stock world, just so that's off your plate, so you don't really, so you're not seeing that stuff and having a feeling that you're missing it, or you're getting overwhelmed with trying to follow that information as well. I mean, that would be a first step.
Okay, yeah, because I believe me, there was, I probably, like most, people just starting out, I probably tried, I don't know, at least 10 different services, and five to 10 different services, and have distilled it down, and didn't find, I think I told you the first time, a lot of those were the basic stuff. They didn't give me anything that I couldn't do myself just by looking at a basic chart and saying, yeah, that looks like it'll be good, I'm going to buy a call, or I'm going to buy a put on it, or whatever. So, now I want to be able to give myself the best chance of, structured trades, to give myself the best chance of success, which I know is what your service does.
Well, that's what I try. I used to be a call and put buyer, but the markets have made me have to change my approach. Also, with the service as well, I've noticed that a lot of people are not able to get in to a lot of my trades, so I have to structure. I structure trades where people can at least get in, have enough time to get in, and I structure and worry about that as well. So, just overall in the marketplaces, the markets made me have to adjust my approach and adjust and learn more about more structured trades and how to to create some of these, what most people would call complicated trades, are really not complicated, but in the beginning they might be.
Yeah, the broken wing butterfly, like for me, is I know how it works. I just need to. If you ask me, hey, show me a stock to put on, yeah, I could go to TOS and come up with the basics, but I would need to be able to go through the whole strategy thing, and that one doesn't come as easily to me as some of these other strategies. But it sounds like that one's like
it's not that widely used. That's why not a lot of people talk about it. And a broken wing butterfly is different from an unbalanced. What we talked about was an unbalanced. A broken wing is just the wing. One side of the wing is a strike wider than the other side. So so we're talking about a call spread. This would be.
Have you ever done like unbalanced call spreads where you'll buy 10 of something and sell 20 of the same?
Well, that's just a ratio spread, and that's part of a butterfly.
Yeah.
Okay,
I guess right. Then I guess the other leg of it is it makes it up a butterfly.
Yeah, that's exactly it. So when I structure trades, I break it down and I try to, that's what I think of. So Amazon. The one I've really liked recently, especially on the weeklies, have been the unbalanced butterflies. So, with 4 days, it's not really ideal here. But again, you always want to keep in consideration when you're on individual names, Amazon, Apple, even though they're big names, they could have some kind of problems. The chances of them melting up are very unlikely. The whole markets or individual names have a less likely chance of melting up unless it's some kind of takeover news or potential takeover of a company. Amazon is not a company that's going to be taken over. Apple is not. So the risk that I see on it would be downside risk. So doing some kind of put spread or ratio spread too far out, it can give you a lot of trouble. So what I'm trying to say is that to sell some kind of to set up some kind of butterfly or some kind of unbalanced trade can get a little bit hard because you do have that risk. Now, so I just clicked on this unbalanced, and this is 5 points wide. When you look at a broken wing butterfly, we want to look at so it's typically a broken wing butterfly is going to be just like this. You could do an unbalanced broken wing butterfly, but what the difference is that the lower strike is going to be one strike wider. So you notice we got 5 points here, and then we got 10 points here, and by widening it, we've created a lower debit, and we have where we start to lose money on this trade is going to be at 165. And the reason why we want 160 is just to get a cheap protection. So really, if you just took out this buy of this 10 right here, this 160, we have a 1/2 ratio. We have a put ratio, but we're going out of the money on this just to buy a cheap protection put. And so instead of having the margin required on this short 170.
So the way I should look at this is, okay, you bought 10, 175, sold the 20, and the 160 is just a kind of a backside protection for some.
Yeah, it's a cheap protection in case if it does kind of melt down. Also, it's going to reduce our margin requirements.
But taking that, let's take that out a minute. On just a plus 10 minus 20 here for the put, you're playing for a decline in it. Is that, yeah. But not past 170, obviously.
Well, 170 is a sweet point, but we still have profit potential into 165.
Okay. And what if let's say it was about, let's say it just was, I don't know, 180 or 185.
Well, if it was 185 with this trade, well, how I try to structure my trades is I try to get a debit. So this one I believe was an 8-cent credit. 8-cent debit, not credit. So it's a cheap debit, but this is you might not get it exactly, but if you feel confident in direction and what you want to learn more about is technical analysis and being able to pick directional plays. Now, for a directional trade and you're paying 8 cents, it's not a bad trade to put on like what you're talking about. So you're risking 8 cents, you have a position on, and you're looking for a decline. Well, if it doesn't work out, it's not going to kill your account. I look at these as little lotto ticket trades. Now, if Amazon does pull back, with how this trade is structured, I don't know why this is not moving up here. So, our 170 is our ideal point. When I look at Amazon here on the chart, oh, that's not Amazon. Alrighty, you still there?
I'm listening.
Okay, well, I didn't hear you. All right, so 170.
Okay. So you bought 110. Oh, go ahead. Okay.
So I mean, I just structured this to show you how what I'm looking at. But this has 4 days to expiration. 170. It's pretty far out of the money. I mean, when I look at this, we got 180 here. I mean, near 180. This low right here is 182 or 181. So, I mean, the chances in 4 days for this retesting here is more likely. So I wouldn't, this 170, is not a trade that I would actually be interested in. I would actually look at something at the 180. So let's just see what with 4 days what this 180 would work out to be. Let's just do a butterfly here. So notice this, if we just do a regular butterfly, 64 cents. Well, if we roll this out to potentially a 170, we make this a little bit wider. It's a 38-cent debit. Not really something I'm interested in still here. And the reason it is, it's a pretty, I mean, it has opportunity for it, but for it to settle at 180, it makes it a bit more difficult. What you want to try to do, especially with these butterflies, is make a tent that's wide enough where you have enough opportunity to make profit. So let's just roll this down to 170. Let's see what the 165 looks like. So let's. So this one might be a little bit more interesting to me. If it pushes on the 180, it might pull into the 175, and then we also have the 165 as protection, and it's 21-cent debit. Still wouldn't be one that
my understanding is your best chance of profit is between 175 and 180 by expiration.
Some max profit. All right, so our max profit right here is right at this level here at right at this 175. That's where the top of a tent. Is it still coming out? Hello?
Yeah, no, I can hear you now.
Okay.
Yeah, can you hear me?
I can't cut it out.
Hello?
Yep, I can hear you.
Yeah.
Yeah, I can hear you.
Okay. Just in general, though, like I mean, when you start, I mean, how many trades a week, you know, I know you can't really put a number on it, but, you know, assuming you want to, you know, I mean, what do you think is stuff, I mean, a handful a week? I mean, obviously you have to look for good opportunities. I mean, I know technical analysis. I don't know, you know, I can't drill down. I mean, I understand the bull flags and stuff. I mean, identifying those chart patterns, I mean, support and resistance is not a big deal, and looking some of that stuff, but, you know, but I mean, should I be, you know, how do you approach, or I guess, I mean, I should be looking at every potential trade, start with the technical analysis, and then we can look a little fundamentals and look for it.
But that goes into your trade. Hey, Eric?
Hello?
You okay? You there?
Yeah, okay, now I got you. Yeah.
Yeah, I'm here.
I don't know what happened there. Lost you.
Okay, I had my...
I was just...
I'm not sure if it's my internet connection or if it's yours, or I mean if it's the phone connection. I think it might be my internet. I closed down my Chrome application, so hopefully that helps on the bandwidth.
Okay. Yeah, I'm just on my cell phone, so...
Okay.
But what I was going to say is, I mean, how many trades, you know, is there... I know there's not a specific number, but, you know, in a certain week, do you look for a particular amount of trades, or just anything that...
No, it really depends on my focus and how I feel that week, honestly. I mean, some weeks I really don't feel like trading at times, and it becomes tough, and yeah, I'm just not really interested in the market, or you know, interested in trading, or you know, putting at risk, or just going through the roller coaster. So there's times I don't take any trades, or I might take not that many. And there's some weeks where I'm really focused, and I can really focus on my trading, and I can take a handful of trades. I mean, a lot of my trades that I do have been on Fridays, going and using the weekly options. I mean, that's where I've been making my most money, and that's what I really enjoy right now. I mean, I come in on a Friday, I take a few positions, I could play some of the moves, and I make my week's worth of trading on a few positions, and then, you know, that's what has been working for me recently. Other than that,
for example, oh, go ahead. Yeah.
I
look at a stock. I mean, there's so many. You know, I don't know. Do you just, let's say you know, you're given a certain name. You can just look at it and say, yeah, this isn't worth my time, or it is worth my time.
Yeah. I mean, you just get interested in certain names. I mean, you know, so, you know, I'm not Amazon, I'm bearish on, but I don't really see a setup. And like, if you use technical analysis, you have to go through a lot of charts, and that's a problem. So, I mean, I go through, there's 2,000 charts I typically go through. I scan for names, or scan for opportunities. So, I mean, there's two ways I come across individual name or trading opportunities. It's either unusual option activity or technical setups. And the third category, just as recently, has been, using the weekly options on a Friday. So following this watch list of weekly names that I have here, and looking for opportunities is trading those, and using the weekly options possibly for a day trade. May possibly buy on a weekly call.
I mean, because okay, I'll just real quick, like with your videos and stuff, I know like for example, you're looking at On Semiconductor and Fairchild. I was, unfortunately, there are times when I can't get to your video till the next morning, or the next day, which, but I mean, just in general, I mean, are you buying calls and stuff or puts on some of these? Are those kind of meant for some of your other subscribers that aren't, maybe don't have the capability to sell?
I try to make it as both. I mean, a name like the activity that I see on that I went over in the video. I mean, that's money. That's money rotating into calls, and with the call activity or with just option activity, there's a bit of transparency. If they're buying a call and they're hitting the offer, that's a good sign that they're buying. And if they're buying, the only way they make money is if the price of that underlining goes higher, if that call goes higher. So to me, that's is a most real-time indicator of money flowing into a certain name as it can get. You can have the MACD or whatever you can possibly have, but me seeing money actually getting thrown into a certain strike price is very interesting, and something I would want to get behind. Now, I don't throw money at every name that I possibly see. There's different ways to trade it, but like a name like ONN, like a bull flag, well, I will buy the out of the money call because I'm looking for a breakout.
And that you might hold for 2 weeks or a month, because I think you were saying on your some of those were February, I believe.
Well, the contract I was talking about was in January, and that right now is like 25 cents. So, I mean, to me, I would be risking that whole 25 cents. I mean, this is the
sure.
This is the whole trade I would be risking. So right now, I was talking about these January 9s. So I'm 20 cents. That's what I'm looking at. I'm risking that. And you can see here the contracts in those December 8s, they increased to 13,000. Now, they're only 4 days to expiration, and I don't know what they're going into, but that's a lot of money that just rotated, that moved into these short time frame short time frame contracts. And I don't know why it's going on, but it's something going on there. Something's making a directional bet. And, the best trade for me is not to go with these 4-day contracts. It's to go into these contracts that have at least 40 days here, because I can also align it that there's a possible, bullish flag that's forming here, and it's been in a range, and it could break out to the upside.
So the best way then, I mean, I would think to going forward for your services, maybe take a flyer on some of these, obviously where the, can't take it on all of them, and then kind of look for the Friday trades, and then if you have like that one last week, I mean, I paper traded the one that actually didn't go into profit until the last minute there on Friday.
Which one?
It wasn't Amazon, was it Google? I think it was Google. Yeah, it was Google. The 625, 615.
Yeah, that one. That was a sweater.
Yeah, it was. Like I said, I had paper traded. I didn't have it. But just, for example, just let's say, can you pull up one stock? Just take and let's just pull up SLW, Silver Wheaton.
Which one?
SLW, Silver Wheaton.
Okay, I thought you said XLW.
Okay, that one always trades in a range, and I mean you can see it's down today. But I mean, if you looked at that, I mean, just say, for example, you look at that. I mean, what would what would your criteria be? Okay, just looking at that. Yeah, it's down today. The market's down, but it's basically been in a range. It hasn't really dipped much below 30 in quite a while. And then obviously when silver goes up, and I know you're not interested in SLV, but just in general for that one, I'm just picking a random one that I've traded in the past with some success. But when you look at that, I mean, what's the first thing? Not for a trade for me now, but like, what are you looking at? Just basically support and resistance. And
yep. So I mean, I see a pattern. There's a triangle. I just drew these lines here. Notice that they just broke down here, out of this range. The price action got very tight, and it's between these moving averages are pretty tight as well, and it's starting to make a break for the downside here. So the first level of support would be right here, and I call these, these are triangles as well. So this is a triangle between this level, between the 30 and where this is breaking down. So it likely is going to pull back to this level here. But then we have another level.
Hello? Hello?
Yeah.
Hello?
So this is, yeah, I'm here.
Are you there?
Yeah.
Sorry, I missed that whole part. You were saying after when you said it broke down, you said it looks like it could break down farther.
Okay.
I missed the rest of it.
So on the daily chart, it's starting to break down the weekly. But when I was talking about on the daily, it's starting to break down, and the first level of support is going to be right here, about 30. Then I had this other line drawn here previously from my other analysis when I looked at this chart, but this is a major support level on the weekly. So I'd be looking for a pullback potentially into this level. So this is probably the range that you were talking about here. This big range that's been in. That's probably what you're talking about. So it wants to pull back to top here. As this for a setup. Are you there?
Yeah, I'm here. It's cutting out every little bit,
okay.
But I can still hear you.
It could be just because the platform is taking a lot of the bandwidth, and that's how. And GoToWebinar takes a lot of bandwidth as well. So probably when I switch between charts, that's probably when a lot of the bandwidth gets taken. So as a potential trade here, I mean, you could have a push into likely $30 here. I mean, is this a name that I would trade? Probably not.
I'm just, and that's the thing is I don't, but I mean, it does fluctuate a lot on a daily basis, but, if you were to, I mean, just looking at that, and I mean, I know you wouldn't do it, but if you were going to do it, I mean, what kind of a, what kind of a trade would you, when you see something like that, what kind of a trade would you even think about with something like that, like a bear call spread or something, or?
I mean, you could do that. I mean, I like to play direction because that's how I am at times. A bear call spread could work on this one. And
you would never just sell calls on it, naked calls. That's
no,
right.
Absolutely not.
Kind of like the put.
Absolutely not.
Do you think naked calls are even worse than naked puts?
They could be. I mean, Silver Wheaton could get bought out. I don't know how big of the company. I don't know the likelihood of it, but there's always that chance. Like I said, I mean, Amazon.
In general, you stay away from naked calls.
I stay away from naked calls and puts. If I do a naked put, it only is a day trade, and it's only for a short amount of time for that day. If I happen to do it.
If let's say you were doing a bull call spread, a spread like say for example this stock, say you did I'm going to throw out in random numbers, a 30, 34 spread, but to offset the cost of that spread, you sold like the 26 or 25 puts to maybe bring, and I don't know what it would cost. I'm just saying, is that because I have used that in the past. Is that a strategy that is that considered fairly dangerous?
Well, you said selling a put, so I said I wouldn't sell a put. I would.
Right, okay.
I have done in the past sold a put spread to buy a call spread. So that's if you're familiar with the term a risk reversal, that's similar to a risk reversal. The only issue with the risk reversal is you're buying calls and selling puts. You're selling out of the money puts and buying out of the money calls.
You mean when you're going totally bullish? You're buying calls and selling puts lower, to kind of fund the purchase of the calls.
Yep. But I would cap it off with a call spread, so I would buy an out of the money or sell an out of the money call, and on the put side, I would buy an out of the money put to identify my total risk and reward.
Okay. So I was just curious so basically that. Buying a spread and then offset, and the same thing like you did a bear put spread. I actually did that with TLT about a month ago, or maybe a month and a half ago, and actually, did okay. Sold the like a 120, 150, or bought the 120, 115 bear put spread, and then sold the $123 calls to fund it, or basically. So it was just a net of I think it was like a quarter or something, or instead of the full cost of that. But again. that is, I understand that's fairly risky. I was just curious of your opinion of that. Probably pretty cool.
Yeah, I mean, there's nothing wrong with it. I just wouldn't do a naked put. I would do a put spread.
Okay. So if you're looking at silver wheat, and like you said, and again, I'm not going to do it. I just was kind of curious your take on that. If you're looking at that, you're probably thinking a bearish trend to it, and you prefer to do directional. So if you're going to play, rather than just buying, puts on it, you would maybe sell out like a bear call spread or something.
Yeah, I mean, I would look at that. I actually probably would do a put. I mean, I would stop out at the high of today. That would be my stop out. So I would put it on pretty tight because this is a pattern here, and it's a formation, and it's right at the bottom end of it. So, I mean, I would look at it for it to continue to break down to the bottom end here, at least 30. That's what I would be looking for to lock up profits. And my stop out point I would put it on pretty tight, so it would be at the day high.
So you actually would buy something like that if you were to play just a short-term, quick directional, buy a put a stop at the high of the day, and just kind of see what happens over the next day or two.
Yeah, because I'm just looking at on the bottom here, I have average implied volatility, and right now the implied volatility looks relatively cheap. So
right.
for a put,
if it's low, technically you can buy rather than sell. Isn't that?
Well, if it's a relatively low, it makes more sense to be a buyer than a seller of premium.
Okay. All right. So I guess then going forward, I just need to.
You notice, like, okay, so my chart here on October, where my line is, this candle. So let me zoom in a bit. This print here. Notice where the average implied volatility. It's relatively high. Well,
yes,
it broke down, and if you're a put buyer here, or even it's essential too, even if you're a call buyer. The volume or the implied volatility started to come out of it, even on this. So price moving in favor, but don't have implied moving against you, where you're not going to profit as much on a long call. And also, if you're long a put, you're seeing prices go away from you, and also implied volatility go away from you as well. So,
okay. So I guess really what I need to do going forward is just, any particular, other than the butterfly, I mean, I know, looking at stuff, I mean, typically you're thinking of credit spreads, this butterfly, maybe some unbalanced stuff, and then it really looks good, without, it's kind of silly to spend, like some of these stocks where you're right at the money, I mean, yes, you have a 50% delta or whatever, but you're spending $2 or $3, per contract to buy a call or a put. I mean, I don't know, the whole buying premium thing, I just got so burned on that.
And listen, and if that's not your thing, don't try to force yourself to do it. I mean, just let it be. You don't have to be a premium buyer.
I mean, if I am going to be one, I want to be smarter about it. Maybe like buying a bull call.
So I mean, so your biggest thing is you want to follow a select few. Which I mean, I would say let's focus on the weeklies. Let's just focus on the weeklies.
Okay.
You have a handful of names that you can choose from. They're liquid. They're movers, and they give you opportunity to profit. So you have a few names that you can follow. And everyone wants to follow Apple or Priceline or Netflix or Google, MasterCard. So you have a selection of names that you have opportunities to. When you look at a name like Google, I mean, I would say, how can I structure a trade? I'm relatively bullish on Google. I don't want to balance or go too much into the chart here, but let's just kind of see what kind of trade that we can get out of here in 4 days. So 6:30. I mean, let's just say Google runs. Are you there?
Yeah, I'm listening.
Okay, I just want to make sure. All right, I got to back it out here. This is a major level here. $630. All right, so 630 is a pretty major level. With 4 days, can Google run wild? That's what I think about, possibly. So let's just look at a 650. Let's just see what we could get together here. And like I said, I've been going to the unbalanced butterflies, or the unbalanced butterflies. So, this is what I look at. This is what is interesting to me. It's not a big home run, but I mean, 12 cents. And let's say Google does, break out, and if it does break out, it's going to get going pretty fast. In 4 days, is it going to move up 25 points? I mean, it could. Google can move about 10 points a day. So, if this were the case, our profit potential is at 650. That's where our max profit is. And if it runs there in 4 days, we make a pretty good return. And this is the kind of trades I'm talking about. This is a directional trade, and now it's at 5 cents. So it's trading between 5 and 12. So 12 might not be ideal. It's flashing between that. So let's say if we can get 5 or 10 cents out of this a credit, well, we're playing a directional play, and we're bullish on it. Let's say you want to pick a direction, and we're picking a direction. We get a move higher into 650. We make a lot of money. Well, if we don't lose a lot of money either. We're being smart. To me, this is a smart premium buy, because we're still taking in a credit, we're still taking a direction, and we make the most money at 650, and we lose the most after 655. Well, is it going to run 25, or is it going to run 30 points in 4 days? With what the market's giving us, I don't really think so. And just because the nature of these options that we're using, the time decay on these are going to hit pretty hard as well. So it just gives us a lot of opportunity to make profit on a move higher.
Is there a way, when setting this trade up like this, you can convert this trade to the Analyze tab, or do you have to go into Analyze and put it back?
No, so I could just click on, you right-click on Analyze here, and we'll zoom right into the Analyze tab.
And it'll show the exact trade you're doing.
Yep, so I had another trade in here from Google already. Now we have this one showing, and this is what it looks like.
Okay. So obviously, if it went the other direction, let's say, market tanked this week and it ended up finishing looking at what? A loss. It's flat. Hello? Hello?
Yeah, are you there?
Oh, yeah, now I can hear you. Sorry, I don't know what happened. Missed the whole thing on that. I was just asking. I saw you move around a lot, but I didn't hear you for the last minute.
No, you're cutting out, so I didn't talk too much. What I heard on the breakup was if the market completely tanked, what would happen?
And let's say it just finished at 610.
Yeah, you take in 5 cent credits. You take in that credit. That's showing.
Where would your loss be? Your loss would be if it's like 630 or something?
No, so we're short the 650s. That's where we want the prices to close. So again, right. You have to think. We're thinking about this. We're painting a picture here. We have 4 days. So that's with trading options. You have to know the time frame that you're in, what you're looking for in that amount of time frame, and the worst case outcome and the best case scenario. Best case scenario is prices close at 650. You can see at the top of that peak there, it's a near 5,000 profit. Now, our worst case scenario is if prices go past 655. It's actually 652.50 is where we start to lose money. The most we lose is at 655.
And I'm looking on the screen here.
All the way down. So you see negative. So right here.
Oh yeah, okay. So this minus 20. So you lose 2,200.
No. Right here is about 5,000.
Where does it say 5,000 on that? I'm missing that.
That's 4,900.
Oh, I see. I see. Oh, all the way to the left, minus 5,000. Okay.
Well, it says, but in the red it says 12/17/11. That's expiration.
Okay. Yeah, minus 4,900. Okay.
Yeah, that's the most.
Oh, I see. And the 2,485 is if that's what the price was today, you'd be down $2,400.
Yeah, that's the.
Okay. All right. Gotcha. So of course, now there's ways if you saw things getting really sporty there at the end of the week, there's ways could you adjust? Is this adjustable?
Well, you just go long calls. I mean, that's how you would adjust it. You go long calls, but the nature of this trade is relatively bullish. You're just looking for it to prop in this tent area here. So I mean, you have between 645. So you have $7.50 really to get in some kind of profit here. And with 4 days to expire, with prices at 625, you're looking for a move of about 25 points. I mean, it's a very probable trade, on a breakout that Google will run that much, but probably settle back down in a 650 range.
And there's no harm in if it, let's say Thursday it was about to close at say 642 and everything looked real bullish. You could certainly close that out ahead and take your profit.
Yeah, I'm not sure how much profit. So let's just formulate that. So
642 on Thursday.
Yeah, let's go to Thursday here and let's move the prices up.
Yeah, 640, whatever. I don't know, 643, fine, whatever.
643, so 1215. Implied volatility would have to come out of here. Usually this shows me the implied volatility level, which would have to come down. The implied volatility would come down, but this is what it would look like. 646 is right here. So 643 is right here at this price. And we're looking at a $200 on how it's not taken in consideration with the implied volatility levels, which would come down because there's only 1 day of life left in these options.
So that would be a higher number, obviously.
So it would be a little. I'm suspecting it's going to be a little bit of a higher number. So even on that, you're risking. You take in 5 cents, and you have a $200 profit on it with a couple of days.
But really, this kind of trade you need to hold through Friday or through at least.
Well, that's where you make the most bang for your buck is on Friday. To me, I don't look. I mean, for that to happen to me is like. I want to put in case of like winning the lotto, but for a trade like that to happen and to ideally set exactly at that strike price is going to be very tough. I just want to get that move, and if I get that move, I profit from it. So it's chipping away at the marketplace. If I take in a 5 cent credit, so $5 credit, or I'm sorry, $50 credit. So if I take a $50 credit. And now it's $217. Well, I've made a decent return on it, so
Sure.
I'm fine with that.
Okay. That's. I'll just.
And then it's not home run trades. I mean, that's not what I'm looking for here. I'm looking just to chip away at the marketplace. You could put on quite a few of these trades, and they're not that relatively that stressful. I mean. When you put it onto the downside, you have that downside risk. What we talked about with Netflix is that people are going to rush the doors on an exit when the markets get scary or a stock gets scary. But on the move higher, you get moves higher, but the market never really melts up. I mean, it's not sustainable. There's a lot of optimistic people out there, and we looked at Netflix of how long it took to get to that level, and with a matter of a few weeks, it demolished that price. In 12 months of time. So it's just when you keep in mind of understanding how to structure trades to the upside or downside, always keep in mind that moves to the downside happen much faster than moves to the upside.
Okay. All right. Well, then I guess realistically, I should be looking for maybe a couple, 2-3 trades a week. Stick with the Friday stuff, see how that works, and then just.
Yeah, and the other thing I've been incorporating too is using the SPX on on Thursdays, and initiating a trade on doing an iron condor trade. I mean, you could check the trade from this past Thursday on the SPX, but
yeah, I did. I papered that one.
Okay,
that was a good trade.
So I mean, that's the other one too.
Hey, real quick, do two questions. Number one, the interview of those traders, is that something, you know, that would be beneficial?
I mean, I wouldn't put the product. I wouldn't put the product together if I didn't think. I mean, I wouldn't waste my time if I didn't think it was useful. I mean, I spent about 8 hours total, you know, with them. I think there's a lot of good information in there.
Okay.
And then, I mean, and if you're interested in it and you want to do it, I would go ahead. I just moved the price up, so if you are, let me know. And I'll give it to you what I was doing on the for the weekend special. And if listen, if you don't get anything out of it, or it's this kind of information that you already know or don't find useful, just let me know and I'll refund it to you.
Okay.
And don't be. I mean, some information some people, you know, find useful, and some information they don't. It's not for me to gauge. It's for you to gauge. So I won't be offended, or I won't, you know, be crushed or be angry at you.
What do you? That's cool. No, I know. I mean, you got a product, and it sounded pretty good. My own biggest thing is, am I going to have enough time to get the full benefit out of it? Because, like I said, I'm so time constrained now, moving all around the country and doing all the other stuff. I'm just trying to barely keep up with the daily videos.
Yeah, I mean, I have it on a downloadable. You can download the MP3. So,
yeah, that's probably what I would do. Is just do that.
Yeah, I also have the transcript too, and I have Jeff Ogden. I don't know if you're familiar with him, but
yeah, I do. I've read one of his books.
Okay, I actually I reached out to him, and he wanted to do an interview, and I think I'm going to add him to the series. So there's going to be 8 option traders, and then there's Timothy Sykes, who does penny stock trading.
Well,
that's on there as well.
Actually, so you could actually read the interviews as well as listen to them.
Yeah, each one is transcribed.
Okay, yeah, because that's great. That's probably what I would do. If I wanted to do it, should I just shoot you an email?
Yeah, just shoot me an email, or shoot me an email, and I'll just tell you to, because I already moved the price up. I'll just tell you to just PayPal 147 over, and I'll give you access to that product.
Okay. Do you do much of the futures?
I do trade futures, yes. I trade mostly the ES futures.
So lately I've been, again, all paper, but like last night, I saw the trend down, so it just really tight. I just bought or sold one Russell contract.
Uh-huh.
And, woke up this morning, put a stop. I went to sleep in my hotel and woke up, and it's like up like $1,800. I mean, I know, the futures move so fast, and I mean, each contract is, but I was just curious if you did that, or if you find success with that. I mean, I've just messed around with some of the indexes on futures. And there's a whole theory on selling options for commodity futures.
Yeah, I don't know too much about that. I mean, I trade futures. I trade futures, and I think that's the best, at times the best to day trade if you look to day trade. Day trading stocks to me, is a little bit difficult. And trading futures is difficult. Trading futures are difficult as well, but there's things that you can understand a little bit better and identify. Like I use pivot points, to sell into levels. I use the tick ratio and up and down volume. So there's different things I'm looking at. The trend that, for a day trade, like today's trend is lower. Now we're seeing consolidation. Most of the move was in the morning. Possibly late in the afternoon, you're not going to get, depending on how bearish the market is, you're not going to get moved to test low and for low. So for
Hello?
Yep.
Hello?
Yeah, I don't know how much you heard of that.
Oh, that was cut out. Anyway, I didn't hear much of anything. That's cool. I know we're way over, so we can talk about future. What for next consultation? What would you say? Like a week or two, or what would you think? Knowing what you know now, I'm just trying to get some strategies together, a plan going forward. Obviously a different plan than I had in the past, where I was all over the map. So maybe just some trades of yours. And
yeah, so the trades that I email out are the ones that I feel I have I'm the most confident about. So I mean, I would suggest following those. I wouldn't.
Yeah. I have been. Okay.
Though the other stuff
Yeah.
I provide is more trade ideas, and you know the service I try to I tiptoe and I'm trying to find out what the right mix is. And some people want the unusual option activity, some people don't. Some people want just the best trade ideas, and they want more trade ideas, and some people want more more unusual option activity. And for me, I just try to find the right mix. So I try to provide a level of being able to help people with profitable trades or finding trades, and at the same time teaching them how to find their own trades as well.
Right, because the whole idea is not to become reliant on. I mean, I just that's what I want to do is get to a point where I can, look at something and say, okay, it's not that interesting, or it is that interesting, and then what if so, I mean, what kind of trades would work best with that particular issue.
Yeah, I mean that's how that's exactly the process that I do. I look at a stock, or I look at something comes across it, and I look at it and I say, is this interesting to me, or where's the opportunity at? And then I try to structure a trade around it that gives me the most success, the most probable, or the highest probability of success.